The Bears are back in town, and I want to know why. Let's take a look and see what's causing this reaction. We need to look at the volume, we need to look at the moving averages, and we need to see how can we protect ourselves from this. So let's get into the charts. Here's a one-year chart of the S&P 500. The market got smoked today. Today is August 2nd, Friday. We want to look at some key support and resistance areas to see what's going on within the S&P 500. The 52-week low, we have 4103. We're not going to count the change. And we have a 52-week high of 5669. Now the white line is the 10-day, the purple line is the 21-day, the green line is the 50-day, and the red line is the 200-day moving average. When the index is in a bull phase and all the stocks relative inside of this index will hang out at the 10 and the 21-day, and then also the 50-day moving average. This was a downdraft. It broke the 50-day, came to this area of support here, and continued with this upward phase here. We are currently in a downdraft. It's broken all the moving averages like it did several months ago. So how substantial is this downdraft? The S&P 500 closed down today 100, and it closed at 5346 and change. This is a major gap down. This is a major pullback in the market. Now we're going to have some levels of support. The low was 4103, 52-week low, and the 52-week high is 5669. The S&P has a 38% increase in the past year. Now, if we take from the high, the 5669, it's currently trading at 5346. That's a recent decrease from the all-time high of 5.69%. The average market return is 10% over the history of the market. I think we all might get a little bit spoiled with some of these returns that we've gotten in the past couple of years with 100, 200, 300, 400%. Some of these stocks, they haven't grown 300, 400%. They might have grown 10, 20, 30%, but not 400%. So a lot of these stocks are really extended. And this whole index was extended. Now it's pulling back. Let's take a look at some key areas to look at. This is a nice level of support that we're going to have. We're going to have a level of support down here. And then, of course, that's going to be hovering right around the 200-day moving average, which is about in the 5,000 range. We're currently trading at 5346. This index gap down through all of its moving averages. It's kind of floating in the middle of nowhere. But these are opportunities to buy into the market at a discount. Now, right now, what you want to do when the market has increased in volatility, what you want to do is reduce your size of your trades, and you want to expand your stop range, because typically what takes a month, 2 months, 3 months in a move will get wiped out in several days in a vicious downtrend, which is actually what is going on right now. Apple looks really good here. It's trading at its 10-day moving average, but it did cross to the downside through its 21-day. I'm kind of waiting for Apple to pull back to at least 211, possibly to 199. But some of these stocks are opportunities to buy. Amazon got smoked today. The earnings estimate was $1.04. The actual was $1.26. They beat the street and they got smoked. Why did they get smoked? Well, they got smoked because the whole market got smoked. And here's a substantial gap up that happened on their last earnings. And this is just creating balance to correct this gap up. This quarter, the estimate was 80 cents. The actual was $1. The stock gapped up, takes off. And then on this quarter here, the estimate was 104, the actual was 123, and the stock gets decimated. What did it do? It gapped down and it sold off all the way down to fill this gap. This is a buying opportunity. If you're in it for the long haul and you want to invest in this company, I think Amazon's a great company. This is a great opportunity to buy this. Can it go down even further? Absolutely. In the long run, it's a great company. We are going to look at Broadcom. icon. It's hit a level of support. It broke through it, it touched it, now it's closed right in the range. And here's another thing to look at when the markets get smoked. Some of these stocks, like this stock got smoked just like the market, but look at the volume. The volume was kind of drying up compared to its average volume. This is actually looking good and healthy for me. I've been waiting for this stock to pull back. Trading this, I like what I see right now. Berkshire, it's just pulled back to the 21-day moving average. This still looks good. Google broke the 10, 21, and the 50-day moving average. It's hit a key level of support, 158.28. I would wait for that area. Lilly has broken all the moving averages, but it's hit a key level of support. It should hold here, but if it doesn't, it's going to go down to 726.83. Meta looks good. Microsoft traded down to the 200-day moving average. As you can see, we are looking at a 1-year daily chart. Each candle represents 1 day. And when you are in a bullish phase, you can see that the stock traded close to the 10, 21, occasionally touched the 50-day. We have these moves up, then they consolidate sideways, they move up, they consolidate sideways. We had a bit of a downdraft here, and then we've off to the races here to 468, and now it's pulled back. We should have a nice level of support here. Can it break it? Absolutely. But in the long run, this is a great company. These major downdrafts, this is where you're going to make a lot of money on these stocks. But you want to make sure that protect yourself, manage your risk, put your stops in. If you're looking for long term, these are great opportunities when these markets flush out like this. I wait for these opportunities. The market has been extended for a long time with this big AI craze. That will complete our analysis of the S&P 500. I hope this information was helpful. Please manage your risk.
Thank you for tuning in. I hope this video was helpful and brings value to your process. Be careful when trading and investing in the stock market. It's very risky. And always remember to dot your I's, cross your T's, and don't forget the Z. Happy investing.